Hello and welcome to City AM's video series, Your Questions Answered, where we try and get to the heart, really, of the matters that are getting the square mile talking. And an awful lot of City chatter over recent months, indeed slightly longer than that, has been the London stock market, the London Stock Exchange and the capital's performance, I suppose, when you compare it to international peers, particularly like New York. No one better to discuss it than Charlie Conchie, our investment editor. Very quickly, take us through the sort of last 12 to 18 months of what's happened to the stock exchange and why people are starting to, I suppose, fret for its future.
So yeah, you're right. It has been, a tricky, it's probably an understatement, few months and year or so for the London Stock Exchange. But, more broadly as well, the IPO market has been pretty torrid. And I think it's probably important to contextualise some of those London troubles in the wider global picture. So, ever since really Russia invaded Ukraine, global markets have been, fairly all over the place. And the IPO market has largely been shuttered. I think particularly, sort of second two quarters of last year was a complete drop-off. I think there are some, important and very unique London factors in there as well. I think you see the amount of reform efforts that have gone on since 2020, really. We saw the Hill Review then. There was kind of the ball began to roll on trying to zhuzh up, for lack of a better word, London's markets, trying to sort of rip away some of the red tape, the historic red tape. But I think, as you said, the picture has been fairly gloomy, particularly this year. A lot of the conversation has been about firms going to New York, homegrown firms canning their London listings, scoping out dual listings. And I think in the square mile, there is a bit of a sort of mood of gloom and of panic, to be honest with you. Which is all sort of building up into a place that firms don't really want to be listing in at the moment.
Yeah, that makes sense. Of course, the thing that grabbed everybody's attention was the ARM listing. So this is the chips firm based in Cambridge, owned by SoftBank. But, looking at a listing, and they obviously chose New York instead of London despite political pressure. We've seen Flutter put together a secondary listing in New York. And there have been other, UK firms over the past few years that have listed in New York. Think about Kazoo and Babylon. Now, their floats haven't gone particularly well there, so maybe that's not a very good advert for going across the pond. But I suppose the question is, for all the Sturm and Drang, the heat and light of all of this, how important is it to have functioning equity markets? Because there are some that argue that, well, as long as the private markets, the capital markets, are still functioning, then, maybe we're just being a bit sort of arrogant, maybe being a bit romantic to think about this sort of stock market when there's so many other ways to raise capital.
I think the language which sort of government and which the London Stock Exchange talk about, the situation we're in at the moment, it's actually, there's a lot you can glean from that, which, talk of building globally consequential companies, wealth creation, job creation, and it is about keeping firms, homegrown firms listed in London, and allowing them to access the capital they actually need to grow here. Whereas, traditionally firms get to a certain size, they realise they need a certain amount of capital to finance the growth plans that they're really looking at, and they do very often head off towards the US, which inevitably means, a pivot in maybe strategy and direction, talking to US investors, and it perhaps does mean that there is, the money that would be flowing into the UK, the jobs that might be being created in the UK aren't, and I think that is the crux of the issue, and why there is, so much political attention on it and so much, perhaps news attention on it at the moment as well.
Yeah, well, there's certainly political attention. You referenced the Hill Review earlier, which is around listing rules. There's been the Austin Review, which was around a different part of capital markets. There's now a review that's just finished. We're waiting for the results of it around, I suppose the consequences of it around research and analysis. So there's all sorts of work going into identifying the problems. I suppose the hope really from those who want a functioning, vibrant capital markets or equity markets is that starts to filter through pretty quickly, right? Because otherwise there's a risk that it feels like an awful lot of attention and not enough of it actually turning into real meaningful change for the businesses on the ground that might be thinking about listing.
Yeah, I think you're right. There's probably a sense of review fatigue, and I think there was actually a bit of an effort to try and tie up those various reviews in a bit more of a coherent package. We had Austin and Hill, and then the investment review was launched, and then there was sort of in May time this attempt to kind of tie them together into a better narrative for London. I think there was talk of creating a new sort of market structure, which plays to perhaps the kind of deeper issue, which is for all the regulatory tweaks, for all the changing rules and FCA coming in and sort of merging its premium and standards segments, there is this this vibe issue in London at the moment. And that, I think, is going to be the harder thing to reset. And that is perhaps why we haven't seen the immediate impacts alongside the global context we talked about. Yeah. There is this feeling of, would we really want to list in London at the moment? It's a vote of lack of confidence in the UK's economic outlook. So there is perhaps a deeper underlying issue that goes beyond just regulatory and rule tweaks.
It's amazing you use that word vibe. It is amazing how if you get to the heart of economics and confidence, so much of it comes down to what people think is cool at the moment. And there's not much government, as we know, can do about what people think is cool. So the stock exchange has got an interesting period going forward, and it will certainly be one to watch through the second half of this year and many years beyond, I'm sure. I've been Andy Sylvester. This is CityM. Don't forget to check out all the economics and business news on citym.com, in the paper, online, and now in the app as well. Thanks, Charlie.